everybody. We're going to go ahead and get started. Thank you for joining us today. My name is Ashley Jones. I'm the Managing Director of Community Programs here at the Venture Center. And today we've got a great workshop for you on the topic of disaster recovery and business continuity planning. Today's speakers are two CPAs with Frost PLLC, TJ Boyle and Jason Thomas. They're going to be discussing accounting for loans, future risk mitigation scenarios, and changes to business. But first, a big thank you to our sponsors, Wright Lindsay Jennings, Frost, and the Little Rock Regional Chamber for all their support throughout our programs. So a big thank you to them. And now I will go ahead and turn it over to TJ and Jason.
Thank you. Let me go ahead and make sure I'm sharing my screen. Is that showing us from the beginning?
Yeah.
Perfect. Well, thank you. My name is TJ Boyle. I'm a partner at Frost, and I'm also with Jason Thomas. I'll be starting the presentation. And what we're really going to cover is over the last, now it's been almost 4 months of time since the COVID pandemic has really created an issue for business. Some of the things we've seen as far as changes in the way people are doing business, some risk scenarios that have really come to the forefront, and really general business continuity that people need to think about as they move forward with their business. Because right now is a great time to realize things will change. In the second half, Jason's going to talk more on the things related to the CARES Act that haven't been talked about. We've spent, I know the Venture Center has done multiple discussions and luncheons and learning opportunities related to the Payroll Protection Act, the PPP program. But in the CARES Act, a lot of things may have been somewhat missed that are also a lot of great opportunities for people in business. So we want to make sure those don't get missed because PPP was front and center on everybody's mind. But right now there's also opportunities for people to be able to look forward and look at their taxes and maybe some benefit opportunities. So some of the things what we've been seeing and talking with our clients related to COVID-19. Well, first and foremost, anything happens in business now. I mean, we used to talk about, well, have you thought about these items from a disaster recovery scenario? Have you thought about what can happen next in your business? And people would say, well, that's unlikely. Well, now we can't necessarily get away with saying, well, that's just unlikely. We know unlikely can happen. And although we may not, and let's hope we don't see another pandemic anytime soon, there is a good chance that somebody on here has a business issue that could be sizable in the coming years, in the coming months even. But now is the time to prepare for the future and the change that will come with it. So how do you prepare? What are some of the lessons learned? Some of the key business issues that we've been seeing, and I think most people have seen, related to COVID, the ability to work off-site. A number of us are working off-site, particularly if you're in finance, maybe legal, accounting, but a lot of other companies have their, whether it's rotational basis, a lot of people are doing some sort of off-site working. So how are you learning to manage people from a distance? Other key thing, IT security. How is that working? If you didn't have a training plan, are you working on that? One thing that was seen, it was in a recent Forbes article, is the amount of increase because of all the layoffs. So as layoffs have started, companies have noticed an increase in traffic on their computers. Well, that's data being taken off the computers. So do you have a system in place to look at and be aware of confidential data? So that could be anything from customer lists, maybe proprietary, even proprietary spreadsheets, how you do things, any kind of formula. Is that stuff getting taken off your computer? And that's not just something to look at now. If you see a big spike, that may be something you want to make sure your IT group is aware of in the future, is to be looking for these spikes, because it could mean, whether it's high traffic in your VPN, is something going on where maybe somebody's about to leave in the future. So it may give a little bit of a warning there. So continuing to look at that. Ransomware attacks have increased. We've seen it multiple times, and it's very, especially early on, very important to stay diligent related to making sure your employees are working hard to understand they can't click on everything. Even if they're probably trying to get as much coronavirus, COVID information, they've got to still be as diligent as they were before. If you don't have programs in place related to training and teaching your people that work for you that have email access, you need to do that now. Also thinking about, when it comes to monitoring employees remotely and the distance learning from an IT standpoint, is have you worked through all those potential risks? Now you've got people that are offline, they're having to VPN in. Hopefully are they using their own machine? Is there risk there? So making sure you have documented controls over that. And then one other thing we've seen in business that's really maybe going to come up in the coming months is culture. You've spent a lot of time inside most every business. We try to teach a culture. We know Jason and I, Frost, we've got our culture. We've got to know our people. And then we haven't been able to, necessarily be around them the way we'd like to over the last 3-4 months. Well, having worked with with our staff for years, that goes okay. But what happens when we have our next people we're hiring? What happens? How do we integrate those people into the Frost culture? And the same thing, how do you integrate people if they're working off site into your culture? And that may be something to really sit down and think about with HR and management teams. And one other place where we've seen a lot of disruption related to COVID is supply chains. And those are the types of things that we're also going to focus on when it relates to business interruption or business continuity plans, because these things can happen. So we've all seen, especially as it first started, but even today, is food. I think Kroger still has, you can only get 2 things with meat. Manufacturing, are people even able to meet the amount of goods we need? I was listening to somebody talk yesterday and said, well, be prepared in a couple months, maybe when there's not as many cars available. If you're going to go look for a car, because all the auto manufacturers and their supply chain slowed down and stopped and laid people off and furloughed and different things like that. So what impact does that have down the road? And then just general services. Are you able to meet your customers' needs? And are you getting met maybe with your employee or your service providers and your vendors? So making sure you've seen that from a supply chain disruption. So a couple things to focus on. We're going to focus more on business continuity as opposed to disaster recovery. But a lot of times when people hear both those words, they think they're the same thing. They're fairly interchangeable, but disaster recovery really focuses much more on the IT infrastructure and operations getting going, as opposed to business continuity is much more about the business as a whole, the entire business. So I know a lot of times I'll talk to clients about disaster recovery and they'll talk about backups and maybe offsite. But this is focusing on, well, let's think about a plan for the entire business. What happens if something goes down? Well, it's not just a matter of getting your computers up. It's can your customer sales reps make sales? Can marketing get to the graphics they need? And things like HR. Can you still go about accessing employee information? And other things we've seen before in the past is, okay, well, if something goes down, and we'll get into a couple of examples, are you still able to meet your customers' needs if you sell a product? And your customer may go elsewhere if you don't have these things planned out. So in a business continuity plan, who takes responsibility? So it has to start at the top. It has to start with company leadership. Ownership should be involved, especially if it's an owner manager, but upper management and executives really need to be involved. And you need to take time to do dedicated teams. So IT personnel will be a part of it, and business specialists, particularly at the appropriate level of the business. So maybe each business unit leader would be involved to think through the process. It's going to be a heavy brainstorming at the beginning, and you need to have owners of these processes and what's going to happen. So who else is going to be involved in actually making your business plan, business continuity plan? Certainly the company leadership, but then also think about who your risk experts are from outside, not just internal. This is where you need to communicate with all your advisors. So maybe it's insurance. So one of the things that's come up a lot over the last few months, we've been asked about is, well, will our insurance cover this? Will we be covered for business interruption? And the reality is that depends on your insurance policy. There's a distinct possibility it won't unless you've specifically employed that. But also thinking through that process with your insurance providers, say, well, if we can't overcome this risk, do we have the insurance that helps either make us whole or substantially reduce that? So thinking through that process and making sure your insurance providers are there along with you to make sure they're a business, an asset as well. IT, if you use anybody outsourced to help you look over your infrastructure, that's always a great idea to get new ideas on what could be the risks. Where, if you need to set up an offsite, or if you're using the cloud, what all's going on from a documentation standpoint. Depending on what the situation may be, do you need to talk to somebody in government? Is there a consideration of whether it's environmental or other regulatory bodies? Do you need to have them involved to understand who to call? Who would be involved if something happened, and how would you get their help from the standpoint of a governmental agency? I'd always recommend getting legal, and if it's other things, particularly looking at who you might need maybe as a supplement from an assistance standpoint. So if your concern is maybe people, if somebody left or somebody had a sickness and was gone immediately, do you maybe have somebody involved that would be a backup? Maybe that's somebody outside, maybe it's your accounting advisors, maybe they can help you, even if it's on the HR side or something like that. So those are the people, that you want involved in some way to help you out. The key components, and depending on how you look at these are primarily the four main things that people will talk about as the main key components of any business continuity plan. So the first thing you start out with is your business impact and risk assessment. So how much you're looking at all the different risks. We're going to get into the risk response and strategy, actually the communication and making sure this plan is documented. And then it's a constant plan. It's not a static. It doesn't need to be something that you think, okay, I've done it, now it goes on the shelf and I'm done with it. It needs to be a key part of your business and how you think about risk, what can be done. And these things, when you're thinking about what all your business risks are, I always go back to one. We had somebody talk to us a few years ago. What happened with them was they had a tornado come through and hit their small operation. Well, it happened at 2 a.m. The CEO came and talked to us, saying, this is the point at which I had the playbook. I knew exactly what I was supposed to do, instead of thinking, who do I call first? And that's what this is all about, is setting up a game plan for what will you do while you're able to be calm, and while you're able to actually walk through it and make objective decisions, instead of trying to do it after the fact, while things are moving pretty fast and at a higher anxiety and risk level. So the first thing with business plan as it relates to the impact and analysis, risk assessment, look at the scenarios, brainstorm what could happen. First one, pandemic. That wasn't probably on most people's mind 6 months ago, probably top of mind now. I think more people really thought about natural disasters. Tornadoes. We're in Arkansas, so you've got tornadoes. Last year we had floods. There will always be some potential risk, depending on where your locations. You may have another location on the coast. Is there hurricane risk? Being aware of cyber and ransomware attacks. Do you know who to call first? Do you have insurance? Do you have people that would take over in case of that to negotiate and contact the right authorities? Walk through that process, because it's a scary process for anybody who's gone through it. And then also thinking about what can happen related to key personnel, customer, if a customer goes out of business, a vendor or service provider, do you have a backup? You're running into all these scenarios of the what if scenario and trying to understand, well, what is the impact? So if I lose a customer, well, is that a lost sale? Do I have other things? Am I just competing? If I have a situation where I lose a vendor, does that mean I can't make sales? So how much does that happen? You look currently at the situation we're in. Well, sometimes those are delayed sales, but if you think about there's certain industries, it's a point in time type of sale. Those sales won't come back. I was listening to somebody talk yesterday and brought up a good point that restaurants, you can't make up for those prior sales if something happens. Other industries, well, it may just be a delay. If something happens, let's say there's a disaster of some sort, do you have increased expenses? Do you have fines, penalties? Are you prepared for that? Do you know what's going to happen if these things happen? And then also, just if you have general growth plans, what's going to happen to those things if you don't prepare properly? What is your risk, and what is the impact that you could have? So trying to understand how long delays would be impacted, where you could go for, and how much the total cost will be. That also helps, and that would be the same thing your insurance would look at when you're trying to analyze that piece. So part of our risk response and our strategies, you've got to set up teams. After you've identified the risk, you've got to have a command structure. So we've got to have resources identified. You're going to have you're wanting to put together response teams over each piece. They're going to know their job when this happens. Do you need to have working temporary and maybe long-term working relationships? I was talking with somebody today just saying, well, what happens if your plant over here goes down? Do you have a relationship with somebody else? Maybe it's a competitor and they're going to charge you a little bit, but at least you don't necessarily lose those customers. You can still manufacture your goods. You can still get them shipped. Do you have a way to work that can still meet your customers' needs to where you don't lose those customers? And IT functions, do you know what would happen next? If something happens, do you know the next step? And does each person know the next step? And that's what's going to be key, is to understanding the short-term response, what's going to happen immediately, but then also making sure there's a timeline and a plan for both your employees and your customers, so that people can understand what's going on. For instance, you may have seen from a number of attorneys and accountants like ourselves, when COVID happened, people's work was changing. People were going to work from home. We did this, a number of other people made sure to send out, we're still working properly, we're still fine. We made sure our customers knew everybody's still available. They may just not be in the office. We're all going to be completely available though. So making sure those responses are able to be communicated, and what's the status. So key things, it needs to be documented. This is all about putting a plan on paper, and so that it can be shared. It is in a place that it creates a playbook. It creates a place to where when it happens, we can just initiate our plan. So both from a standpoint of what do we need to tell people outside the company, what do we need to tell, or inside our organization, So making sure those things are totally transparent, and that everybody knows their roles. Designated leadership needs to understand the testing, needs to understand when the plans start. They're going to be the main source of information. So knowing who's going to be communicating to employees. Do you have somebody that would communicate to your customers, can immediately tell everybody, yeah, you may have seen this thing happen. You may have seen that we had a fire. Don't worry, you're still taken care of. We've got plans in place. There may be different things. You may have heard somebody's leaving. Don't worry, we've got somebody in place. So making sure those communications are handled and that you've got somebody on the front end. So it makes that plan just go much easier in the transition phase. And then lastly, as I said in the beginning, this is a constant plan. This is a dynamic thing for your company. So you need to have the risk response, but it needs to be tested at least annually. A lot of people will do it in different ways. So you may have a tabletop test where people get together every year. Some people actually recommend quarterly, maybe semi-annually, to go over these things. Understand, has there been key changes? Is there key changes in the environment? Key changes in the employee population? Maybe you actually walk through the actual plan and actually implement it. You do an actual stage test. So you walk through those different things and you're able to see, will our plan work? Is everybody ready for it? And it's the same thing that IT, typically you hear about IT, well, have they tested their backups? Yeah, you hope that works. They've tested them. Yes, they all come back up. Same thing with your business continuity plan. Are we ready to make this happen? I talked with, when I've talked with people before on this that don't have a plan, they said, yeah, I've got a backup in case our location over here goes down. We'll call our competitor up the road, or they do something similar. So, oh, really? Well, do you have that in writing? Is that person still there? And they said, you know, actually my contact left. I'm not sure who it is over at that location. So making sure those are updated to where if you've got a plan, you're able to know who I'd call, take the guesswork out of it, and make it as, take as much of the risk and make it as seamless as possible. And lastly, some key resources. You know, certainly there's a lot of places you can go to. You can contact us, and we're certainly able to help. If you're looking to get started, the Department of Homeland Security actually has some good information at ready.gov, and they've got a section for business continuity plans to get yourself going. If you're a small business, want to start understanding. Also the Society for Human Resource Management. Those are some good places if you want to see some documents and start that process. Again, you've got to get your key advisors involved in the process, but the plan really only works and is only able to do it when it's written, reviewed, and then monitored or tested and updated. So that's key takeaway is you've got to get this going, but this is the time to really think about it because it is forefront. People are understanding inside the business that this is the time to understand what the next situation is going to be and how can we prevent our help ourselves prevent ourselves from being behind the 8 ball in the future and making our transition plans when something happens much smoother. Now, next up, we'll do questions at the end. Jason Thomas will take over, and he's going to talk on some of the items that have come up related to the CARES Act and tax issues. So you can see how that's beneficial, and then we'll circle back on this and maybe any questions you have over Jason's information.
Hey, Jason, you're muted.
I'm sorry, I was muted. I'll repeat myself. Thanks, TJ. That was good stuff. I think what I take away from that is what I've heard from so many of our clients is they're concerned about a loss of culture and how do you develop that and maintain it. A lot of our clients and a lot of people that work with the Venture Center are small business, heavily influenced by the top and what comes down in terms of culture. So absolutely, that was all really good stuff. As TJ said, the attention everybody's had has been the PPP loans. And while that was a nice infusion of cash up front, and if you've watched any of our other webinars on that topic, you know, we run through a litany of issues and now Congress has opened it back up, given us all a little more time to deal with it and get forgiveness, but things are not getting better. As we've seen in the past week, if you are in a bar or restaurant world, you're facing increased scrutiny and some states are shutting you down altogether. Whether that happens in Arkansas or not, of course, remains to be seen. But what is part of continuity, obviously, is cash flow. And beyond the PPP, what can we do? So we've been really proactive with our clients on the changes that came through on the CARES Act. There were changes for both individuals and businesses. I'm just going to focus really on the business side today. Their employee retention credit for employers who were actually subject to closure during the initial stages of the pandemic, and again, what we're seeing now on the back end of some of these states. This was a refundable tax credit that you could apply for and use against your share of the Social Security Acts. It can be up to 50% of the qualified wages paid to employees between March 12th and January 1st of next year. This again didn't gain a whole lot of traction. I did have some CFOs who were running analysis to see whether this credit was more beneficial to them than the PPP loan, and more often than not, people chose the PPP loan. Oops. PJ, if you can go back up a slide. Right. Just quickly, I'm not going to go through all this detail, but who was actually eligible, and are you still eligible? Did you operate a trade or business during 2020? Did you experience a significant decline in gross receipts, or were you required to suspend your operations? A little detail on what is actually a significant decline in mean under either scenario. If you have any questions on that, you can ask your advisor or reach out to us. As with what we saw in the PPP loan, the more documentation you have, the better. If you lay in your case out now and making sure that all the information is readily available and in the forefront of your mind, that's what we'd recommend. You want to make your case now rather than trying to look backwards and develop that information when it's cold and you've moved on to other issues. The qualified wages and compensation, anything paid between March 12th of this year and January 1st of 2021. You have to have 100 or fewer full-time employees on average. Any employers with more than 100 employees, qualified wages include wages paid to employees not providing services. So it had to be somebody that you essentially had sent home and you were paying to stay home. You can include up to $100,000 of healthcare costs per employee. Limitations, and this first bullet point is the one I was discussing earlier. Businesses that receive the PPP loan is not eligible for this tax credit. And wages, if you are eligible, but wages that were used to determine tax credits under the FFCRA cannot be used for this purpose. So it's a relatively narrow credit, and again, from our experience, was not widely used. Delay of payment of employer payroll taxes. This was very popular and became even more popular with the latest changes to the PPP regulations. Now all employers can delay deposited payment of their share of the Social Security taxes between March 27th of 2020 and December 31st of this year. This also applies for self-employed individuals. They can delay the payment of certain self-employed taxes for the payroll tax deferral for the same applicable period. Recipients of the PPP loan who have been notified of loans are forgiven cannot defer these payments. If a recipient has not been notified of forgiveness, they can still defer payroll taxes, and this is the change that came about in the last couple of weeks. But once you receive notification, you have to end your deferral. And that amount has previously been deferred before the notification date is still due on the applicable date. What is the applicable date? December 31st of 2021, 50% of that amount has to be paid and deposited, and then the remaining has to be paid a year later on December 31st of 2022. Modifications of net operating losses. This again has been a very popular change to the tax law. We had some changes recently in 2017 that were very restrictive. And as a result of the Trump tax cuts, I think Trump and Congress were trying to level the playing field and actually make that tax bill come under budget. Congress recognized the significant impact of the shutdown and slowdown in business, and the value of these net operating losses changed the law to permit for now a 5-year carryback allowed on net operating losses of 2018, 19, and 2020. You can still carry forward your NOL indefinitely. And from our perspective, this was some pretty low-hanging fruit. We jumped out early and we're spending not only a lot of our time on PPP loans, the extended tax due date, but also taking any net operating losses for 18 and 19 and going backwards and getting refunds of previously paid taxes. The next, TJ, if you don't mind pulling back up. Yeah, one point to point out is the NOL is now 100% deductible. The most recent tax law changes had limited the NOLs to 80%. So for 18, 19, and 20, 100% of your NOL is now deductible. Just a couple of little notes again on modification on the NOLs. When NOL is carried back to years when the most recent tax law change applied, the taxpayer is treated as though they made an election to not apply the carryback against repatriation income. Not everybody's in that boat, but that is an important point. And the TCJA has been edited to change the limitation in carrybacks net operating losses arising tax years beginning after December 31st, 2017. Again, the TCJA had put in place for non-corporate taxpayers some limitations with respect to what they call excess business losses. And in this very same way with the NOLs, Congress chose to allow these losses to be fully deductible now and remove that provision of the tax code. From an individual taxpayer who has pass-through entity, S-Corp, partnership, LLC, this was significant. And we saw, again, this impacting our clients in 18 and what we were anticipating for 19. So if you had a loss or a disallowed excess business loss in 18 and 19, you can now either change it for 19 if you haven't filed, or you can go back and amend 18 and 19 to take full advantage of those losses. In some situations, it's going to create an NOL, and then you can take the NOL and go backwards 5 years. The AMT credit change from prior years. This was, again, significant for one of my clients in that if a corporation had when the tax law changed in 2017, if they had a carry forward AMT tax credit, they could start receiving some of those monies back over 18 through 22. Congress accelerated this process and allows you to claim the full amount in 18 and 19. You can either divide it 50% per year, or if you want to elect to take all of it and go back to 18, you can do that. This again was significant, an immediate tax savings and cash flow generator for our clients. So it was we've been big fans of all the changes that came out of the CARES Act. Obviously, we haven't been big fans of all the issues that we've had to deal with and our clients have had to, but I do think Congress did get it right with a lot of these changes. Limitation on business interest. Keep harping back to the 2017 changes, but when the 17 changes came through, this was one of those items that I think a lot of people overlooked and didn't quite take into consideration what was the limitation on the deductibility of business interest for their business. And what Congress did on the CARES Act was the limitation had been roughly, it's called 30% of adjusted taxable income in a more common sense, you could probably call it 30% of EBITDA is what your limitation was. And Congress changed that to allow 50% rather than 30. Again, big change, going to be very important considering the losses that are going to be flowing through and other changes to what we're going to see coming for our bottom line and our taxable income for the next couple of years. So this change is good for 2019 and 2020. And as this bullet point points out, corporations can elect to use 2019 adjusted taxable income as their 2020 adjusted taxable income in case of any coronavirus related impacts that carry through this year. Technical amendments regarding qualified improvement property. Again, this was something that had been sitting on the books for a while. This was a tax kind of a glitch that was in the TCJA. And what has happened is now any internal improvement to your building you own or leased building that would be considered leasehold improvements or other general finish out, whether that's an office space or any other type of retail establishment, those improvements are now eligible for immediate expensing. Again, we knew coming into this year where we had clients with this issue hanging out there, we've gone in and taken full advantage of it going forward. And some of this, depending on how you keep your records, track your expenses or your build outs, may require a help of somebody that is experienced with cost segregation work and can go in, take the plans, take the invoices and really break it down and maximize the value for you and really increase that deduction. You may say, why would I want more deductions if I'm losing money as it is? Again, depending on how your past couple of years have gone, if you've been successful, if you've been paying in tax, this additional expense and increasing the size of the loss will allow you to go back the 5 years and recapture some of those previously paid taxes. Advanced refunding of credits. You know, I have not seen a lot of this, as with the other credit discussion, we haven't seen a lot of this come across the desk. I did have a client call me about it, so their payroll provider was asking them if they were interested in it. And what is it? Eligible employers with less than 500 employees can receive a credit to reimburse employees for the cost of sick pay leave. Leave is required to be granted when needed. And when is that? Quarantine due to COVID-19, experiencing symptoms, or experiencing other similar conditions. If they're quarantined or sick, they're going to receive the regular pay for up to 2 weeks or 80 hours and not income more than $511 per day, or $5,110 in total. This amount in total is capped at $200 per day or $2,000 in total. An employee cannot work because they must take care of a child, which we've seen obviously a lot of, and it's going to continue to impact us and perhaps pretty deep into the fall, depending on where our schools land or other child care opportunities are available. They can receive up to two-thirds of their regular pay for 10 weeks, in addition to the previously stated amounts. And this cap is $200 per day or $10,000 in total. What's the pay period we're looking at? April 1st through December 31st. This includes your share of Medicare tax and your respective portion of health insurance. It does not include your share of the Social Security tax. However, this credit can be used against Social Security tax paid on all wages to the employees. And that's it. That's a brief overview of tax side of things, and maybe get you thinking about some tax or some cash generation and tax saving opportunities in addition to the PPP allowance. And with that, I'm going to turn it back over to Ashley.
Great, thank you both. we did want to open it up for questions from the audience. I'm watching both Zoom and Facebook. Feel free to post your question in the chat box, or if you're feeling brave, you can unmute yourself and show yourself and ask your question live. We do have a couple of questions that have come in through the chat, so I'll just start with those. There was a question about the 2019 tax return. Is that still July 15th, and is there potentially a change coming, or do you think it'll stay July 15th?
Yeah, no change with that. Mnuchin had mentioned that it could potentially get pushed out to September 15th, but the IRS came out yesterday in Treasury and said that's not going to happen. So July 15th is your date.
Got it. Let's see. Another question, will an unemployed employee be taxed on the extra $600 they're getting on top of the normal unemployment checks?
Yes.
And one more. We received recovery grants from various organizations. Are those grants taxable?
I would say it depends on the grant. My thoughts would be no, but the details may tell you otherwise. And the other thing to consider, a lot of the discussion we've had, whether it's been deadlines or the new changes to the CARES Act, you always have to take into consideration your state law and whether the states have actually adopted or conformed to what the federal government's doing, which the states oftentimes do.
Good to know. Anybody else have any other questions? Whether it's on the CARES Act, tax questions, or business continuity planning? No questions. Well, if anyone does have a follow-up question, is there a good way to reach out, or how do they get in touch with someone from Frost?
Absolutely. Go to our website, find TJRI there, or anybody else obviously on our team. So that's the easiest way to get there.
Got it.
And just, yeah, if they want, just go to our website, especially with everything that both Jason was talking about. We do expect there will be continued government stimulus of some sort coming forward. So you can go on there, and we have a COVID section related to that. I know I even saw today that Congressman Hill, along with Darren Williams, CEO at Southern Bank, put out a letter or had an article related to trying to extend the PPP program for maybe small businesses who hadn't gotten it. So hopefully that does go through, because I know that was a struggle for a lot of people realizing they were eligible. But again, it's an opportunity to just continue to keep your eyes open, because I'm sure there will be more coming out as we all struggle through this.
Absolutely. And we actually, go ahead, Jason.
No, I was just saying thank you for.
We actually had a couple more questions. One, someone asked, if I did not utilize all my PPP for payroll used for rent and other expenses, is there a tax implication on my PPP loan?
So, so the way the PPP loan will work is that when you run through your calculation of what is forgivable, so if you run through your calculation and let's say, I'll just use round numbers, 90% is forgivable. You got a $100,000 PPP loan, 90% is forgivable. Your 10% will not be forgivable. That'll be a loan that you will have to pay back. So there's not necessarily a tax implication there, but there's a loan you have to pay back. And then as it relates to the 90% that's forgiven, and that doesn't mean, you'll run through the calculations based on your payroll and your other, which is now a 60-40 split that you can use. As the law is currently stated, the forgiveness is not taxable, but the payments that you use the money for are now no longer deductible. So it's still a wash. Jason, I mean, I think we've seen people in Congress maybe trying to get to where you can kind of get that double benefit, but that still has not changed.
Yeah, that's still pending, and we'll see where Congress lands on that. That was a pretty hot topic early. It's kind of died down for right now. I think the other comment that I would make on forgiveness is if you didn't elect the 8 weeks, remember you have 24 weeks to make those payments and spread that payroll out. So, you know, Congress is doing everything they can to make this forgivable. So I would absolutely recommend you give that another look. And
yeah, I mean, we've recommended to everybody, don't go fast to get the forgiveness, because the forgiveness doesn't get you any more money. It doesn't really benefit you. So if you're not at 100% forgiveness, run the calculation, look out what you might be able to do, because it may be a matter of you're increasing your hiring now. Well, that'll give you a safe harbor and you can get to a higher amount of forgiveness, or you just may, like Jason's saying, having more time, you'll be able to get to full forgiveness. And so just run those calculations and don't get real concerned with getting forgiven early, as opposed to, because you've got plenty of time to fill out the form. There's no speed in it. I mean, you've got 10 months. So there's plenty of time there. So, you know, run the calculation and make sure you're doing what's best for you.
And on the other side of that, we are talking about 2% loan. So don't beat yourself up too bad for almost free money.
That's right. What's the worst? That's the worst you're stuck with is a low interest loan.
Mm-hmm.
I agree with Mike. I've been preaching that as well. This is as good a money as you're going to get. So, yeah.
That's right.
Well, this has been some fantastic information. I don't see any other questions. And again, this will be available. This is recorded. It's live on our Facebook. You can go back and watch that. Thank you again to TJ and Jason for taking time to walk us through some of the information involved with CARES Act and business continuity plans. Some folks haven't even thought about that. You mentioned the pandemic. Who would have thought we'd be in a pandemic right now? But now it's top of mind for everyone. So thanks again for bringing that to light and shedding some light on some of the information involved today. I also want to shout out again to our sponsors, Wright Lindsay Jennings, of course, you guys at Frost and the Little Rock Chamber. We have several more programs. We put a bow on June this is the last one of June, and we have several more coming up in July. This is a topic that's going to change in the future. So I definitely see us doing another one of these as things change and come about. So we'll invite you folks back for another one of these. I encourage everyone to check out our Facebook page, our website, sign up for our newsletter so you can keep up with everything going on, all the workshops and programs and things we have. And thank you all again. Have a great day.